As the crypto correction looms on, it is once again time to be checking in with the most important indicator that has essentially told us when to keep risk off in order to stay safe in this current crypto correction. With that said, welcome back to EllioTrades channel. I'm your host Krown, and today we have a big one, mostly focused on Bitcoin. As always, the reason being because whatever direction that Bitcoin is going, it's usually going to align with the direction of the rest of the market. So that means to say that we could look at all of the altcoin setups, of which I'm sure there's a few bullish ones here and there, but ultimately, if Bitcoin is of course within a downtrend and moving specifically, then they're unlikely to play out. Certainly low as a probability. I also want to let you know if you're interested in a daily Bitcoin analysis, if you think that might be valuable towards your life. I do exactly that. You can find a link in the description below. So I want to start it off, of course, with the most important thing right here, right now. The one thing that's been keeping us safe within this market that has been essentially signaling caution for a long time, and it's actually still continuing to signal caution, perhaps after a bit of a short-term bounce. That is the global open interest. Of course, open interest, why is it important? That is because it represents open leverage positions, meaning positions that have pain points that can be liquidated. So if you are long, you can be liquidated, which means that you must sell. If you're short, you can be liquidated as well. And well, not really right now, unless you're super over leveraged, but you can be liquidated, of course, and you'd be forced to buy. So in this case, we identified over the past year and further than that as well, anytime the open interest has gotten above 13 billion with a B, it has led to at minimum a 25% correction, I believe it is, or 20 to 25% correction, and at maximum a 50% correction. And we have several iterations here. I won't go through all these because we've done this many times on this channel, but most importantly, on the last range high actually two range highs ago in this case, in fact, at $52,000, we once again saw it at around 14 billion and now cratering, which told us, hey, this is still more likely to trade to the downside, especially in line with an overall downtrend. So I'm looking for this to still come at least down to what we saw on our September lows at the about $8.5 billion marker, and perhaps even lower than that. Lower is better, especially when we're coming off of a macro reset. Bitcoin hit all-time highs over here, higher than what we saw even in April and May, which led to that 50% correction. Well, I do want to see this reset, essentially between about 8.5 and 5.5, let's say. The lower, the better. Would make me a lot more confident with calling a major, perhaps even macro low. Until then, I only look at short-term rallies as that, short-term rallies essentially, and it makes me very cautious on the majority of this market. So yeah, still seeing this one come down here. I should also let you know where you can get this data. It is available for 100% free at app.krowntrading, Krown with a K, .net. It is actually my own application, and yeah, take advantage of it. It's there for anyone to use because, well, why not? Anyways, let's go to the charts now. And I guess I'm kind of already giving away what I'm looking at right here. But basically, and I forget if we spoke about this on this channel. If we haven't, or I'm kind of getting my own channel confused with this right now, but basically Bitcoin had a head and shoulders formation going on over here from September with your left shoulder, your head in November, and your right hand shoulder in December. That the reason why this is significant is because one, these do operate somewhat well and okay in Bitcoin land, but two, and more importantly, it does have an implied target, which would be pointed a little bit further south than where we're at right now. Here's the thing though, and again, I want to be very specifically clear with this. I do think that Bitcoin is pretty close here. It's pretty damn close. So we'll talk about what will actually confirm a greater bounce soon enough. But for right now, anywhere between kind of where we're at right now at about just below $33,000, and the actual lows that we've seen going in from our January lows right here, last year that is, and of course the summer lows as well, tested many times on volume might I add as well. It's an extreme probability for humongous bounce, maybe even a macro low. But here's the thing, I would not be going out of my way to call a macro low here, especially as long as Bitcoin is below the $44,000 level, the same level that we've been looking at for the past, I think 2.5 to 3 weeks now, about 2.5 weeks, I believe. And if you've been watching this channel, the content on this channel that I do at least, You've been seeing us slowly move this down ever since the actual trend reversal, which we identified at 63,500 right here. After that point, we said, hey, $65,000 needs to reclaim in order to, obviously reverse the trend and look at some hopium again to the upside. Then after that failed, we moved it down to 59,000 bucks right here. Failed again. Then we moved it down to 52. Now we move it down to 44. At some point, Bitcoin's probably going to put in at least a short-term rally and, try for a high, let's call it like 39 to 39,500, but even that would be another lower high. So here's the thing. What would actually make me consider a reversal on Bitcoin? Well, I'm kind of giving it away with my red LARP lines right here, but basically it would be this. So here's the thing. Bitcoin in the last couple weeks here has done something very significant. What did it do? It got a lower low on the weekly. Why is that important? Because all weekly trend reversals and all weekly trends in Bitcoin history have correlated to a macro shift in direction. Here's the thing. A lower low without a lower high, which we do not have a lower high just yet, is not a trend reversal, but it is the obviously the prerequisite towards a trend reversal. After that, you do look for your lower high. So in this case, it is a bit in limbo here, to be fair, for the long term. And if we throw this back on, there are specific areas to be looking for on a bull trap, which would correlate well with a weekly lower high upon the next rally. So again, I might be getting a bit more into the weeds here. Hopefully I'm being as clear as possible, but basically what I'm saying is we're very likely looking at a bounce here, maybe even around Wednesday, but probably into February in this case. Obviously, Jay Powell is going to be speaking on Wednesday, and he has been known to be quite kind to markets typically. Anyways, perhaps into the next month and a half or two, I would be probably looking for a bounce, assuming that this area does not break here. At that point, the question is, does the bounce get above any of the critical regions? Where would the critical regions be? Well, our last lower high on the daily is $44,000. That would be significant, but not for the weekly, which is in limbo here. The area that you typically look for on a traditional bull trap, aka lower high on the weekly, but a higher high on the daily, would be between the 0.5 and the 618 Fibonacci retracements right here, which is between about 52 and 48 or so thousand, or sorry, let me actually do this properly. Sorry, that is actually incorrect. I had it on the wrong scale. I apologize about that, but it is between $44,000 and $48,500. That means to say that until Bitcoin reclaims back above $48,500, I would say that long term, this is still very much corrective at best. So the hopium is that you get something like this. You pop up there, in the next month and a half or so, come back down and set in a higher low right here, and then off to the races, similar to what you saw actually in the summer off of this September region right here. The doomium, however, is that you pop up there or anywhere around there, turn down, and then break specifically below 39,000 or so, confirming your next lower high, thus confirming a trend reversal, thus confirming at least another move down to about 30,000 bucks again. Again, this is very long-term stuff right here. So let's now break it down into some of the more popular altcoins here and see what those same regions would kind of correlate with. And I don't know, let's start it off with my favorite one, Cardano. Beautiful, or well, maybe not so much, but let's see, let's go to a monthly really quick here. There we go. Whoops, getting my damn lines all. My apologies on that. Oh, I did again. Apologies. Okay, so last we looked at this on Friday, I believe we said a move down to $1 was likely, and then probably a short-term bounce around there. That's what we've kind of gotten thus far. We saw this right here, bounced up all the way to about $1.17 or so. I'm actually probably looking for another bounce off this region as it just retested there again today. I only look for this one to really, shatter below with major targets below, in this case, with a daily closure, let's call it below about 98 cents or, $1 is kind of a little bit easier to say. At that point, I do look for actually another almost 20% move to the downside, somewhere around 80 to 75 cents actually. So until then, a little bit more short-term bouncy, can very easily bounce back up towards, 120 or so. Nothing really changes here as long as you're below about 160. Moving on, we got AVAX, of course. AVAX kind of flailing about the 200 simple, which is not a great signal right there, to be fair. And the weekly is based off the 55. So while I would be looking for likely another test down somewhere around low $50, 50 to 52, let's say, or 53 or so, I would be looking for a bounce there first before any sort of potential continuation of the downside. Likely going to be easiest to watch Bitcoin to the upside on a bounce in the next month and a half or so. Could see anywhere around $75 to $80 or so, but again, quite corrective here if I do say so. Let's move on to Solana. Solana is very interesting as well. Yeah, Solana already hit our $100 target to the downside. Again, short term, more bouncy than not, can very easily bounce back up somewhere around $100. But over the next month or so, it'll be very imperative for this one to reclaim about quite far away, actually, about $1.50 or so. Otherwise, I would be looking for this one to turn down again and find another potential low somewhere around mid to low $50 region. Again, longer term. We're talking very longer term here. And then let's try maybe one more. Let's try Ethereum. I haven't looked at Ethereum. How about that one? That one's rather popular, right? Anyways, let's pull it up here for our Bitstamp. And let's see, where are we on this one? Are we going to load it? That would be good. Anyways, let me go to the monthly right here. Yeah, we're already at the monthly 21. So again, I do look for bounces within this region. Next move down, however, again, this would assume that Bitcoin also plays out a move down as well. I'll be looking somewhere around, let me pull this one out. Not already have it in there, but basically somewhere around about, what is this area? About 1700 to 1900 or so. And at that point, I'd want to come back to it yet again. Until then, well, I think the markets in general are looking for a bounce very, very soon here. Remember, we hit some very critical areas that we spoke about coming into the end of last week. That being, of course, the CME gap that we had way back on over here in July. We're starting to see open interest really come down. Funding rates are starting to also trade slightly negative, not super negative just yet. So I do suspect that the market might have maybe one more washout to Bitcoin's regions, again in the low $30,000 territory. At that point, I'm very likely looking for another bounce, and then that's probably going to bring us into February or so. All right, cool. I think I just spoke your head off right there. Apologies on that, but hopefully it was in some way valuable or useful. I think I'm going to be signing off now. Let me know in the comment section below if there's any tickers that you're specifically looking at. Again, my issue with looking at individualistic tickers is, they can be looking like great setups, but if Bitcoin moves the other way, they're unlikely to play those setups out. It lowers the probability, it lowers the hit rate of those actually playing out in, in the intended direction. So with that in mind, I want to wish you well. Stay safe. As always, cash is a position, and sometimes it's the best position. And if you are unsure of what to do, that probably is the right position. Not that I'm a financial advisor, nor this is financial advice, but in general, it's always good to have a little bit on the side. And there's no, and there's no dishonor in, in being in cash as well, as this market can be very, very unforgiving. So I'll be signing off there, wishing you well yet again. Take care, and until next time.